Recently, S&P Global Ratings made a significant announcement about Ghana's credit status. They've upgraded the country's long-term foreign currency rating from Selective Default to CCC+. This may sound like financial jargon, but for investors and businesses in Ghana, this is a development worth paying close attention to. In this update, we'll break down exactly what this upgrade means, why it's happening now, and what it means for businesses and investors in Ghana. Let's start with what the upgrade really means. Previously, Ghana's rating was at Selective Default, which is a status that reflects a country struggling to meet its debt obligations, essentially saying Ghana is in default, but we're working things out. Now with the upgrade to CCC+, S&P is signaling that Ghana is no longer in default. This doesn't mean everything is perfect. It's still a speculative grade which indicates higher risk, but it's a positive shift, showing that Ghana is making progress in managing its debt and economic situation. Importantly, S&P also assigned a stable outlook for the country. This suggests that, at least for the near term, they do not expect any significant deterioration in Ghana's economic conditions. For those doing business in Ghana, that's a positive signal for stability in the short to medium term. Why did this happen? Several key factors have played a role. First, debt restructuring progress. Ghana has made significant strides in restructuring its debt. The Eurobond swap in October 2024 was a major milestone, and commercial debt negotiations worth billions of dollars are nearing completion. This progress on restructuring has shown S&P that Ghana is serious about addressing its debt challenges. Second, economic policy adjustments. The government has been making important changes to its fiscal policies. The new finance minister, Dr. Cecile Adolphorsen, has been leading efforts to reduce the budget deficit and control government spending. S&P has taken notice of these changes, which are aimed at improving Ghana's financial position over time. Ghana continues to be supported by an IMF program, which provides the country with financial backing and a set of economic reforms to guide its recovery. This kind of external backing helps reduce investor uncertainty. So what does this all mean for businesses and investors in Ghana? Here are a few key points to consider. The upgrade signals that Ghana is moving in the right direction. For foreign investors, this could translate into renewed confidence in Ghana's economy. If you're an investor with interests in Ghana, this could mean less perceived risk and possibly lower borrowing costs for businesses operating in Ghana. With Ghana no longer in default and an improved rating, access to international capital could become easier. For businesses looking to raise funds, whether through debt markets or other means, this could create more favorable conditions. If the government's fiscal reforms continue, it may also lead to lower interest rates in the long run. One of the key factors behind the upgrade is the stabilization of the CDI and inflation control. While inflation is still high, it's trending downward, which will help businesses manage costs and prices more effectively. This stability is important for businesses with foreign exchange needs, as it reduces currency risk. The government has committed to reducing the budget deficit and cutting unnecessary spending. If these plans are successfully executed, the Ghanaian government could have more fiscal room to invest in infrastructure and other development initiatives that could benefit the private sector in the long run. However, it also means that businesses should be prepared for tighter public spending in the short term as the government tightens its belt. Despite the positive signals, it's important to recognize that Ghana still faces significant challenges. The government's ability to deliver on its debt restructuring plans, avoid fiscal slippage, and manage its political landscape will determine the future trajectory of Ghana's economy. Investors need to be aware of these risks, especially with 2024 elections approaching. In summary, this credit rating upgrade is a step in the right direction for Ghana, signaling progress on debt restructuring, fiscal reforms, and overall economic management. For businesses and investors, it offers a more favorable environment in the short term, with improved confidence, easier access to capital, and greater stability. However, there's still work to be done, and risks remain. While the outlook is stable, businesses and investors should keep an eye on how the government's plans unfold and prepare for potential challenges ahead. If you're already in Ghana or looking to invest, this is a moment to reassess your risk and see how these changes might align with your business goals moving forward. Thank you for tuning into this update. Stay informed and make sure your business strategy reflects the dynamic changes in Ghana's economic landscape. If you're already in Ghana or looking to invest, this is a moment to reassess your risk and see how these changes might align with your business goals moving forward. Thank you for tuning into this update. Stay informed and make sure your business strategy reflects the dynamic changes in Ghana's economic landscape.